Hey, good morning, everybody. It's Hammer Claus. It's Wednesday, December 10th, 2025. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. All great products to help you get more business, be a better loan originator, and make more money in 2026. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, talking about what's going on in the markets with rates and pricing this morning. Broadcasted to you on Facebook and YouTube. Got a lot to cover today with the Fed meeting and some of the most up-to-date information. If you're here this morning, say good morning. If you would like to be live and you just can't remember when to join, we've got an awesome text reminder that goes out each and every morning at hmmr.io/reminder is where you can sign up or use this cool QR code over here. If you're on your phone now, take a screenshot. I know it works on Apple, probably the same on Android. Go to your photos, press and hold that QR code, and it'll open up the link for you, and you can sign up for those reminders. While you're signing up for things, don't forget to sign up for our free email lock advice, www.ratelockadvice.com. Get an email to your inbox each and every weekday morning, and also our text alerts. Today is a big day for the text alerts. We will be keeping you posted about what's going on with the action. With reprice risk being high today, you want to make sure you've got something to warn you when you need to lock in any and all of your loans. So make sure you check those out at ratetextalerts.com as well. So if you are here this morning, say good morning. If you're watching on the replay, don't forget to give me a hashtag replay in the comments. Let's go ahead and say hi to all the live folks here this morning. We got Mike Thibault here from Michigan. Good morning, sir. Kyle Mazikis, good morning. Megan Bissell, great to have you here. Mike Brown, good to see you. Vicky McSweeney, hello. Michael Scott Love, great to have you. Sean Segaloff, what's up, my man? Rob Stewart, good to see you. Nicole Semerad, good morning. We got Holly Johnson popping in. If you are here this morning and I missed you, go ahead and say good morning. By the way, I got a question of the day for you. This one's a fun one. So who was born to a pauper on a Christmas day when the New York Times said God is dead and the war's begun? Who was that? Who was born to a pauper as a pauper to a pawn on a Christmas day? And if you need a hint, it is an Elton John song. Let's see if you can remember who was born a pauper to a pawn on a Christmas day. All right, that's up there. While you guys are having some fun with that, let me go ahead and bring up the rest of this stuff we got going on this morning. And all right. So, share the screen. All right, we're going to start off with a quick recap of what happened yesterday. Bonds lost ground through the day. It was not a good thing. Let me go ahead and let's zoom in on this. And I'll make this a little bit kind of like this. And let's refresh this so I can pull it over and pull up Presentify real quick. Hammer, are you ever ready? The answer is no. I'm Duracell. All right, so let me know if you got that joke, by the way. All right, so taking a look here. If we look, let me bring this a little higher. So pricing generally comes out right around 10 a.m. That's right about here. Okay. So early morning, we were kind of settled in. Also at 10 a.m., we got the JOLTS data. And you could see there really wasn't much of a reaction here. JOLTS data came out at 10 a.m. yesterday. And at 9:51, bonds were at like 100.95, 100.96. And then JOLTS data came out and they were at like 100.93, 92, 94. Really not much of a reaction here to the JOLTS data. Now, we could argue that this continuing of worsening that we see through the day here was kind of due to the JOLTS data. The JOLTS data came in stronger than expected, showing stronger labor market than what was expected. But it's really hard to blame this loss on the just the jolts, but we'll blame some of it. The kind of the odd thing though is there were not a lot of reprices yesterday, which I found to be very odd. Seeing that we ended the day. I mean, pricing came out around 100.96, ended the day around 100.81. That's down about 15 basis points. And there wasn't a lot of reprices worse, but that opens the door for today to be a lot worse. The reprices worse that did come in, by the way, take a look at these. Can I move this window? No, I can't. So let me just move this whole window. Hold on, I'll move this over. If you look, a lot of these came in after, like at the end of the day and after hours. I mean, look at most of the repricing, and this is all like PennyMac, but I mean, like most of it came in, late in the day. And then a couple that were early, which are a little odd. UWM, they're very, very quick to reprice now, which we've noticed. Oops, sorry, I kicked my thing over. Hold on, let me pick this up. All right. So anyway, that was kind of what happened yesterday and where things went from there. If we take a look and see rate sheets today, they're going to be worse. Take a look yesterday at where rate sheets were at. We'll use Mortgage News Daily as our reference point, as we often do. And you take a look, and it was kind of funny because according to Mortgage News Daily, this was Monday, and Tuesday rate sheets were slightly better on the day, even though we did see bonds that lost a lot of ground. This morning, we're going to see some of the worst pricing. Now, I'll tell you what's really concerning about this is, let's go ahead and I'm going to move my head out of the way for a minute. Yes, Mike, you nailed it. That's exactly what I was just going to talk about. So Mike Thibault's got this. That's exactly where I was going to go with this, is that the last couple of Fed meetings we have seen, we've seen right here, we've seen our best, lowest rates right before the Fed meeting. And then after the Fed meeting, we saw things jump up. And let me make this even a little bit. There we go. Okay. So, right. Exactly. Mike's got it nailed. The last few times when the Fed, rates were the best right before the meeting. And then look at this time, we're all the way up here. And this morning we'll probably be all the way up here. We'll be at like 6.4. We'll be, so we're probably like up here and pop it up. Right. So this is concerning. The fact that we were low, and we're way up here. And this tells us a lot. And I'm frustrated. I don't know if you are, but I'm definitely frustrated. I was in a floating stance last week for loans, but then this week I said, usually it's calm before the Fed meeting. We usually see this kind of activity where things are slightly better. And it didn't feel like there was a lot of pressure to lock the early part of this week, but we've lost some pretty significant pricing. And I'll tell you, the other thing that really catches my eye is look at where this 10-year treasury yield has gone. We're going to test 4.20 again, but right now it's at 4.19. We were down just 2 weeks ago. We were down to 3.996. So we'll call this 4.0. We knew that was, I had talked about locking, some loans there at that point because we'd be at the best states. And look what we've seen since then. Remember, up for the yield is bad. So we'd rather see this go down than up, right? Look at where we have gone, and look at where this 10-year treasury yield has just gone all the way up, broken through all kinds of support. There was arguably support here. You had a very strong convergence of the 25 and 50-day moving average. We had the 100-day moving average right here. It's blown all the way up. Now we've got the 200-day moving average at 4.25, and there's some arguable at like 4.20. There's some arguable like 4 point, but anyway, 4.25 is where I'm going for the next one. I think we could go up to that or even break that today, though, and that's the concern. Now, in the previous meetings, right? So Fed meeting dates. Let's see, Fed meeting dates. The previous Fed meeting dates were, you've got October 29th and September 17th. So if we go ahead and take a look at October 28th, 29th, right? Look where we were at. We were at 3.985 and 4.0. So this is when we had the actual meeting and it jumped. But heading into it, same thing. Look at how good the 10-year was heading into that meeting and September 17th. So same thing here. It went down before this meeting. It went down before this meeting. And yet this time, look where we're at. It is up, 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 up. And that's something that is not a good sign. So everything right now pointing into this, not really a good thing. By the way, did anyone answer the question? People don't know the no Elton John fans. I can't see. I'm going through the chat. Did anyone answer? Good morning, Zane. Good morning, Mike Morano, Randy Teakle, Bill Stevens. Does anyone know who was born to a pauper on a Christmas day? And the New York Times said God is dead and the war's begun. It's Levon. Levon was a good man. Y'all don't remember Levon? Killing me, people. You're killing me. If anyone know it was Levon, do you guys want me to keep doing those debt trivia? Nobody's getting the answers on these. You guys are getting it. So lock advice today is be ready to lock it all. There's no reason to lock before the meeting because you should be able to lock unless you think that the lender is going to come out there. Let's go over some interesting things about today's meeting. Let me make sure I've got everything in my captions all taken care of. I take the time to write these out. So we talked about what happened yesterday. We talked about rate sheets today. On the calendar today, of course, the Fed statements at 2 p.m. Eastern time, Powell's press conference at 2:30. We usually see things get crazy around 2:50 to 3:15. That's when his prepared comments are over. We start to see the questions roll in. The outlook, I think we could see rates jump as much as a quarter point today and tomorrow. Looking at where we're at today, I think we're going to see some of our worst rates. So the best time to lock was last week. We've seen rates creep a little bit higher since then. But be ready to lock today because it could get worse. Definitely could get worse. Keep that on there. So that is there. Now, the Fed outlook, we've got the rate cut. So, again, we're going to deal with the normal grief that goes on there where everyone thinks mortgage rates are going to go lower because the Fed cut rates. So generally, the time to talk about that was before today, though. It's going to be all downhill after that. This was a really cool thing by Nick Timiraos over in the Wall Street Journal. He said, the Fed vote you won't hear about. The Fed vote you won't hear about. And what he talked about here is, first of all, just so we're clear, lay the backdrop like what he said. 4 times a year, Fed officials write down where they think rates will be at the end of the next few years. So that's what the dot plot is. It's where will rates be at the end of 2020. It's where not where they think they necessarily where they will be, but also where they should be. Where they should be. Okay. So it's important to kind of say that should is better than will, because that's what makes this key. So 4 times a year, Fed officials write down where they think rates should be at the end of the next few years under their base economic outlook and appropriate monetary policy. December is different. It's the only meeting where they also tell you what they thought was appropriate policy for the year that just ended. And that's the key. In other words, do they agree with what happened? Most years, it's a formality. Everyone writes down whatever rate the committee settled on. But when it isn't, you get something fascinating: soft dissents. Now, remember, all 19 Fed officials submit the dot plot projections. Only 12 of them vote in the FOMC meetings. And that alternates year by year. Some go on, some go off, some stay on all the time. Last December, 4 participants wrote down a rate that was 25 basis points higher than where the committee went, essentially saying, I wouldn't have cut. Only one of them actually dissented on the record. This dot plot now could be even messier. And that's going to be interesting. So we're going to want to see that, because that's going to tell us. Now, everyone's making a big deal that Trump is looking to bring in Scott Hassett. But remember, this is not one person's decision. They would still have to influence everybody else. And if you have a lot of Fed members that do not think that rates need to be brought down, it's going to be an uphill battle. Trump isn't just going to be able to bully through everybody. That's why he's got to try to get them, the voting members to vote his way, because there are 12 voting members. So it's going to be interesting to see where that goes. couple of other articles. Global bond yields hit a 16-year high. So it's not just our bonds. Global bond yields hit a 16-year high on fading rate cut bets. And it's not just the U.S. central bank, the Fed. Other central banks are also seen as, basically done. Markets are expecting virtually no more rate cuts from the European Central Bank. Bond investors are now mulling the outlook for global growth, examining inflation risks. So all of these things, we've seen a lot of focus on the Fed rate cuts, but bonds, the 10-year Treasury yield 4.8, that's the highest we've been. Let's go back 6 months. The last time we were down at this level, it was over here. That's in September. So we have not seen the 10-year up at this level since September. Back here, we were right about at these levels, right? 4.18 Friday, September 26th. This was after that last Fed meeting where we had this kind of an uptick. Remember, things were low right before the Fed meeting. This red candlestick here is the Fed meeting. Things got worse, and then they improved in time and they improved. I think what could happen this time, we may not see rates come back down that much. So again, be ready to lock everything. We can't cry about what was missed about these rates here, or if we take a look at mortgage-backed securities, just a couple weeks ago, we were up here tapping things out. This right here, as Mike pointed out, this loss ahead of the meeting is very concerning. I don't think that this support level is going to hold. This is the 100-day moving average. Right now, it is at 100.70. The 5.5 coupon is currently at 100.86. That would be about 15 basis points. This may hold up for today, but I don't think it will hold up if markets don't like where things are going to go. I think we'll see them continue to go down. And if they do, we could be dropping all the way back down into this range, almost 100 basis points, bringing it all the way down here. And you can see that. Let me make this a little bit bigger, or actually we'll make it smaller. Hold on. Okay. You can see that if we draw a line, basically this range here comes up to the 200-day moving average. So that is a huge drop when it comes to the technicals. And we could see things take time and go over the next couple of weeks. They could go that low. So if we see that happen, where were rates back in, when we were at these levels back at the end of August? If we use Mortgage News Daily, look back at the end of August. We got to go make this a little bit bigger. If we were looking at where rates were at the end of August, you were up here at 6.5. And that's very likely what we could see happen right now. So I actually think that even if we do that, it'll be a little bit higher where rates will actually be, even though bonds will be a little bit better. I think you'd be at like 6 5/8. So just keep that in mind. That's kind of everything we got going on. Mike said rate cut today, but very hawkish press conference. Absolutely agree. Mike Tebow saw Elton John front row at Pine Knob. That must have been cool. Must have been a great one. Randy's a vintage stereo guy. Oh, Mike Tebow, you got it. I must have missed it. I did miss it. I'm glad you got it. Good morning, Yasmin. Mike Morano said, Madman across the water. You need 2 minutes, 30 seconds for me to answer. Oh, you're across the water right now? That's awesome. Let's see. What else we got? In the last few times when the Fed met, are the holidays affecting this? I don't think so, Raymond. I don't think the holidays are affecting this much at all. There's still money being spent. Retail sales is still there. People are maxing out credit cards. That stuff's all still there. So I don't think that we're seeing holidays affecting this at all. Good morning, Casey. All right. Well, I think I nailed all of it. Again, I know it's the bearer of bad news. I've been saying that I don't think this Fed meeting is going to help, but I did not anticipate to see rate sheets lose as much as we've lost the last couple of days. Like Mike said, we haven't seen that jump ahead of the meeting. So I'm not really loving that. If you're not signed up for our text alerts this afternoon, make sure you are, because we're going to be sending out text alerts to warn you about what's going on and kind of keep you posted on everything. www.ratetextalerts.com. They're $7 a month. You don't have to spend $100 and look at the live candlesticks. If that's your gig and you like this jam, go do it. I mean, those services are awesome. MBS Live, MBS Highway, I'm not a big fan of Raid Alert. You guys know that. I helped start Raid Alert. I helped promote and launch Raid Alert, and I ran Raid Alert for years. I don't like what it is now. I don't think that it's very accurate, and I don't like the where they pull their data from. I don't think that their data feed is accurate, and I think Brian McNee. Anyway, it doesn't matter. So, oh, the album was Madman Across the Water. Got it. Thank you, Mike. I did not know that. Mike Tiba, how are Black Friday sales this year? Who knows, man? They stretch Black Friday out the entire month now. Black Friday is such a joke. It's it's come, it's gone, it's run its thing. Black Friday sales have come and gone, and they're not real anymore either. So I don't know what the Black Friday number is worth. Eric said MBS isn't worth it. Thank you. Again, for some people it is. Some people, they really want to see the charts. They want to dig deep on that stuff, and that's fantastic. Go by all means, go do it. But for some people, they just want to know. So we send out our text alerts. We have a morning alert, let you know what's going on in the morning. We send out an end of day, and on days like today, where we're going to have a lot of activity and a lot of reprice risk, we're going to help you to warn you. So be ready to lock, float into it. I mean, why are we floating into the meeting? Well, it's because we don't know how market's going to react. And I think Powell's going to burn the barn down today. I really do. But why cut off your nose to spite your face if you can lock? It's one of the few times that we get to kind of roll into the event and react to what's going on instead of trying to forecast what's going on. So, all right, y'all, I'm gonna wrap it up. Thank you again for joining me. Tomorrow we'll circle back. We'll talk about what happened. Make sure you do join me tomorrow. I do this each and every weekday morning, 9:30 a.m. Eastern time. Hope to see you tomorrow. If you're not on our text list to be reminded that I go live, you can go ahead and sign up for a reminder. It's absolutely free. This is for the free reminder that I'm going live. If you'd like to see the show each morning, hmmr.io/reminder, or of course, use that cool QR code. On that note, I'm going to wrap it up. You guys have a fantastic one, and we'll see what happens tomorrow. Take care, everybody. Bye-bye.